Hi everybody, Alex the Pro from Expert Forex, and in today's video I'm going to show you one of the most powerful indicators you will ever find anywhere on the internet. The indicator is the 360-degree indicator. Why it is so powerful: it looks at all aspects of a potential trade that you're looking at. It looks at the direction of that trade, the trendiness of that currency, the potential strength of the move that you're looking at, and then it also looks at the relative strength of that particular currency compared to other currencies in the market. And that is why we call it the 360-degree indicator. It looks at all aspects of proposed currencies that you are going to be trading. Now, this indicator has been around for years, and it is available on our website. There is the website that you can go and download this indicator from. Obviously, it's developed over the years, and it has reached really a good point where the information that you're getting is almost at the point where you don't need charts. You can actually trade from this indicator. Now, I must apologize, this looks a bit complicated, but what I'm displaying here is almost the full potential of the indicator that you can use, and I'll just go through it in a little bit of detail for you. So you can trade a selection of currencies. I normally trade about 28 currencies, only 4 are shown here, but you can trade them in various time frames, and you can see all the time frames that you can trade them in. And then what's nice about that is you can view numerous indicators at the same time. On your screen you can see the 8 indicators that we have available that you can select. You don't have to view them all at the same time, but you can select your favorite ones and view that. And then what you can also do is you can then select if you want to be alerted of potential trades, and the indicator will alert you if there's a potential trade setup. And that's why I'm using this particular indicator. Furthermore, it lets you know the relative strength of the various currencies that you want to trade, and that's shown here in the currency strength side of things, and I'll show you that in a little bit more detail. But again, you can select how many currencies you want to compare with how many other currencies. So that's why it is an all-in-one indicator. I'll just go through the settings very briefly. Settings are very long because you can actually set unique settings for all your indicators, but the main settings are, and I'll just show you here, you can set the actual currencies you want to trade. So you could add the New Zealand, the Oz, and that kind of thing onto that list. You can add the currency pairs that you want to trade, and as I said, I normally trade about 28 of them. So you just add all the currency pairs that you want to monitor, and then you can add the time frames. Now, a lot of people don't want all the time frames to be disclosed, and you'll see I don't do that, but you can actually list all the time frames that you want, and then you can list the indicators that you want to use, and you don't have to use all 8. You can list the ones that you want. That's the overview of the 360 indicator. Now, what I'm going to do is I'm going to show you how I personally use it, and you can adapt this indicator to your own needs. So why I'm showing you this is that in my recent video we launched an analysis service that gets performed for our forum members, our paid forum members. And if you're interested in this particular service, please go and have a look at this video. It tells you everything about the particular service, and you can then take part in the service. I do this every Monday and Thursday morning, and that prepares me for my trading of the market during those parts of the week, and you can literally look over my shoulder as I do that. Now, on your screen you can see all the profiles that I use. I use about 40 profiles. I don't always use all of them. They are handy tools to have when I need to refer to them, but you can see top of the list is the 360-degree indicator, and that is the first one I look at because it gives me an overall view of the whole market. Now, people that take part in this analysis service actually get these profiles. They can go and download it and put them on their own MT4 platforms. They also get all the templates, and they get a few of the indicators free. Some of the indicators that I use are paid indicators, some of them are free. So let's have a look at the way I personally use this tool. So firstly, what I do is I only select the RSI, the ADX and the ATR. And why do I do that? Because those indicators tell me something different about the currency I'm about to trade. Firstly, the RSI gives you direction. So when the RSI is heavily oversold, it means that the market is going down, and that gives me direction on my trade. Now, there's two things that you can do with that information. If you are trend following trader, you know that the market is going down and you sell. If you are a contrarian trader, you then look for reversal points to buy because the market is oversold. So that's where I get my direction from. Very easy, very nice indicator. I love the RSI. Then I look at the ADX. Now that tells me the trendiness of that particular currency. So in other words, if the reading of the ADX is over 30, then the currency is trending. And therefore, if I'm a reversal trader, then I must be very careful of trying to trade reversal trades in the opposite direction of the trend. If I'm a trend trader, this is fantastic information, because then I know there is a confirmed trend in place and I can enter my trades with the trend. So the ADX gives me the trendiness of the currency. Then the ATR, which stands for the average true range, which is basically how volatile is the currency on a daily or on an hourly or on a 4-hour basis. And here you can see how many potential pips you can gain from your transaction. So in other words, if the volatility as shown by the ATR is small, then it's pointless going for a 200 pip target when it only moves 60 pips in a day. But if you're trading a currency where the average move is 200 pips, then it's a reasonable trade. So that is the strength of the move. So you see, these three items are very important. A lot of people focus on direction. They only think of the entry, but you've got to know how trendy the currency is, and you also need to know how strong the potential move can be. That's how I use it. And then I have a look at the relative strength of the currency. So let's have a look a little bit closer at that particular aspect. So here's the direction, trendiness, and strength aspect. And if we just take an example of, let's say, the CAD, that is really overbought at the moment. You can see it's very overbought. But the ADX is saying, hang on, this currency is not really trending. I'm having low readings for it. So that could be viewed as a potential to actually sell into that overbought because the trend is not strong. But then you have a look and say, all right, well, how many pips can I expect out of this? And you can see the CAD is a low volatility currency. You might not get as many pips out of that trade as you might get from the pound yen, for instance, which is more than double than the CAD, or the pound New Zealand, which is way more than double the CAD's volatility. But this is an example of what I would then do. So I would trade a contrarian trade, but I won't go for a massive target, because I know now what the strength of the potential move is, what the trendiness of the particular currency is, and I know the direction that I want to do based on those extreme overbought readings. Then the currency strength one is actually more of a historic one that tells me what is the current level of strength in the market. For instance, at the moment, you can see, and if we look at the last week, you can see that the euro has lost 715 pips compared to its trading partners. However, the yen has made up 780 pips against its trading partners. So immediately you know the euro and the Aussie are weak currencies, and the yen and the pound are very strong currencies. Now, historically, it would have been great if you could sell the euro and buy the pound, or sell the euro and buy the yen, or sell the Oz and buy the yen or the pound. If you knew that information, you would be making a lot of money. But having this information at your fingertips can tell you how, if these conditions are changing, because you can look at it over a daily basis or an hourly basis. So it might be strong now, but the yen is certainly showing that it is continuing to stand. But at the moment, on a daily basis and on a 12-hour, the pound is in fact changing. So the strength of the pound is changing because you see these red blocks compared to the green blocks. So suddenly you can see the dynamics in the market, which currencies are actually changing from being strong to going weak, which ones are staying strong, which ones are becoming weak or are staying weak or changing from a weak position to a stronger position. So this is very exciting. And then in the table below, you can again see, if we look at the daily range, you can see the euros lost 715 pips, but let's see which currencies has caused the main damage. And in fact, it's actually gained against the Oz. It's gained 5 pips against the Oz on the weekly basis. You can change that to the monthly or the daily or whatever, and then that table will change and so on. And you can then see, all right, the strong guys, where they got most of their gains from. This the yen has obviously got its most of its gains from the euro and so on. And if you go to the charts, you can actually see these dynamics playing out. So it's good to know whether a currency is strong and will remain strong, or weak and will remain weak. And that's what this particular table allows me. So I know 4 things about the currency that I'm about to trade. I know the direction, I know the trendiness of the currency, I know the potential move that I can expect, and I know the relative strength about that particular currency crosses currencies at my fingertips. So I can make informed decisions. And the more you use this tool, the less you start looking at charts, and the more you actually take trades on this indicator. But it takes experience, it takes practice, and the sooner you start, the sooner you get to those efficiency levels. Remember, a journey of 1,000 miles starts with the first step. If you're not going to do the first step, you'll never reach the end of your journey. So how do you get hold of the 360-degree indicator? You go to the web page that I've shown you earlier. You follow that link. The links, by the way, will be in the description of the video as well as in the commentary of the video, so don't worry about them if they're not clickable in the actual video. So you go there, and the other way of getting hold of it is you buy the bundle of 17 EAs, which you can get for a discount of 81%. And as you can see there, the 360-degree indicator is free with that particular bundle. Now, I really hope that you've learned something new about Forex trading that you might not have known. Maybe this is a checklist for you. Do you take trendiness into account? Do you take the strength of the currency into account? Do you take the relative strength of the currency compared to its trading partners into account? Most people concentrate so much on the direction, they forget about the other essential elements of trading. So from me, Alex Aploy, cheerio.